The Houston Real Estate Market Report just came out, and I have some great news for you. The market is actually performing pretty well. It's very interesting. So let's dive into it. The single-family home sales went up 3.5% year over year to 8,820 homes sold in June. The pending data is a little suspicious. HAR put out an announcement saying that it's contradictory to other data that they got. So we're going to skip over the pending data because nationally, the pending sales are going down. And given the increase in inventory, it's looking like that 12% probably isn't very accurate. The median sales price is pretty flat compared to last year, but the average sales price did go up just a little over 1%. I think that's mostly due to the fact that the luxury market had a huge increase in sales over the past year. So homes that were $1 million and above were at a 17% increase in transactions since last year. So likely that's where we're seeing that increase in average sales price. Let's jump over to the Harris County data because we have some pretty interesting information over here as well. You can see here that the median list price is starting to decline, and the HAR data shows compared to last summer. So it's just year over year, whereas this is like a rolling average. So you can see here it's declining a little bit. The median price of new listings is staying pretty much flat. Price per square foot is also trending downwards. Days on market is also trending downwards, which is interesting. One other point to note is this price decreases. So when we have price reductions, we are at 35% of the properties on the market have had price reductions. Usually the price reductions have a direct correlation to the increase in mortgage rates because it affects the buyer's buying power. So you can see here that when there's an increase in mortgage rates, which we have right now, the price reductions start to climb right along with it. Price per square foot in the greater Houston area has dropped a little bit from 181 to 180. Also, the days on market has gone up. It's 52 days now as opposed to 50 a year ago. Here's a breakdown of the activity based on price points. So anything that's 250 and under and everything over $1 million has had an increase in sales over last year, and everything in the middle of the market is having a decrease in sales. So I can definitely feel this out in the field. The mid-price point is really difficult. Buyers are really cautious and they're very price sensitive. Luxury market is booming at the moment. Here in Harris County, you can see the Market Action Index, and this tells you a little bit about if we are leaning more towards a buyer's market or a seller's market. So currently we're still sitting with a seller's slight advantage, but it's tipping a little bit over to the buyer side at the moment. And you can really feel that with the price reductions, with increase in inventory, and with higher days on market. One thing to take note of is if you're a seller, is check out this graph by Altos Research. So you've got this chart that shows the leading indicators in home sales that are up and coming. So basically they have taken the pending data, they've taken purchase applications, and they've taken mortgage interest. So that can be either applying for new loans or getting refinancing. So when you take all of those into effect, they're all trending down. So less interest means less buyers coming to the market shortly. So you can really feel the market having a little bit of a shift. The buyer activity has been lower at the listings, and now we can see why that is. The increase in interest rates translating to less buyer applications for loans and less buyers out shopping. They're much more price conscious now than they were before. So what does all of this mean? Basically, the market is rewarding precision pricing. I may have said that already last month, but it's becoming more and more evident. The more overpriced your home is if you're selling, the longer it will sit on the market and the more drastic the reductions. If you're getting any traffic at all, we won't talk about that because they're having great sales. The luxury sector is in a market all by itself. So if you're there, that's a different strategy altogether. But overall, the market is starting to flatten out a little bit. That also is typical with seasonal sales. You see that downshift in activity after July 4th. And also with this rise in interest rate, you're going to feel that effect. Now, if you're a buyer, there is rising inventory. There are more price reductions. There's longer days on market. So you have a bit more opportunity out here. If you want to know how this affects you in your particular situation, reach out and I will be happy to go over your neighborhood and your goals. All right, I will see you next month.